All right, welcome back to Yahoo Finance Live on this Friday morning. Let's take a look at shares of Intel under some pressure here after the company out with its latest quarterly report last night. We see the stock is off about 5% in early trading as the company continues to look at a multi-year plan to really, transition and right-size, turn around the business, however we want to frame that conversation. So let's get into some of the takeaways from this quarter and maybe the road ahead for Intel now. Joining us here is Hans Mosesmann. He's an analyst over at Rosenblatt Securities. Hans, great to talk with you this morning. So let's just start with the current quarter and what you saw in there. As I see it, basically your estimates and the street estimates were pretty much in line with what the company said if we back out that $650 million one-time benefit. And so, $18 billion on top line, where do you see that number going, in future quarters?
Operating margins are going to go down. There's a huge investment that the company is going to be doing for this so-called integrated device manufacturing 2.0 or IDM 2.0. They have yield issues. They have 7 nanometer cost issues. They have packaging issues. It's going to take a couple of years. So operating margins are probably going to start going into the mid 20s entering 2022, which is interesting because AMD's margins are going to go into the mid 20s into the high 20s next year. So you're seeing an interesting crossover there. So challenging times, and Pat has some work ahead of him for sure.
And Hans, I think the prevailing view on the street is that Intel is behind its competitors. In what areas do you think Intel is behind its competitors? And when do you think they will start taking market share back?
Well, it's going to take years. They're behind in terms of process technology. Just to give you a sense, 3 to 5 years ago, they were ahead of TSMC by 1 to 2 years. Now they're behind TSMC by 2 to 3 years. So that's a heavy lift to cede to competitors like NVIDIA, AMD, and Xilinx. From an architectural perspective, the architecture of design, how you design a microprocessor, their architecture is very old. They never bothered to innovate because they had all this market share. AMD innovated over a 5-year period of time, and now they have a better roadmap. So they have a microarchitecture issue. And to add insult to injury, the world of computing is going away from homogeneous CPU-only computing. It's going to accelerators like GPUs and ASICs and FPGAs. And Intel, through acquisition or even organically, has done very poorly. It's not their skill set. And to add on top of that, they want to get into the financial services businesses. So it's very many issues that they have to deal with, will take many years.
And Hans, you've got a sell rating on the stock, actually. Do you think, you say it's going to take many years. Are you even confident that they can achieve it, that they can catch up?
I'm skeptical that they can ever catch up on the foundry side of things. In 2023 or 2024, when their 7 nanometer will be in production, TSMC is going to be at 3. You have to engage in some serious static analysis to make the case that they can catch up. You have to assume that TSMC, the best foundry in the world, is going to have significant execution issues for Intel to catch up. It's very difficult. From a process technology perspective, to say that you have leading edge and to take that knowledge and apply it to foundry services, it's a totally different skill set. Your process technology and your corporate culture has to be suited for dealing with customers that are always complaining and wanting very many things. Intel's corporate culture is take it or leave it. So there's a lot of heavy lifting here, and it'll take many years.
And Hans, do you think Intel needs to embark on a multi-year restructuring plan to strip out costs? And along those lines, is Mobileye still a core asset inside the company?
Mobileye is the gem of Intel. Out of all the acquisitions, Mobileye is truly remarkable what they're doing, how they're doing it. And part of the reason for that is that the deal was struck in a way that Intel would not really get too involved in the process and the R&D side of things and on the innovation. Regarding the model, the IDM 2.0 model by definition per se requires significant investment. That's why their operating margins are coming down. and they will come down for the next few years. For them to catch up, it's a multi-dimensional problem for them to do this, and they have to run faster because they have to go to 5 nanometer very, very quickly. So they're not going to cut costs. That was the previous CEO's kind of focus, to kind of keep operating margins in that above 30% range. Now all bets are off until this IDM 2.0 model is achieved for the next several years. Their OpEx is going to be growing at a significant pace, and sales growth is going to be ephemeral at best.
And, Hans, finally, before we let you go, just talk us through a little bit of how you're thinking about Pat Gelsinger now being the CEO at Intel. Had been a longtime Intel employee. He's a technical person first. And that certainly changes, the ethos inside companies, whether you're from the finance department or the engineering side. How are you thinking about that change? Obviously, investors were quite excited, but as you've outlined here in detail, very complicated road ahead for him.
Yeah, I mean, he's the guy. Based on our checks, he was the guy that was supposed to assume the role 3 years ago, not Bob Swan. There were some, secondary issues that led to that not happening. So three and a half years ago, Pat Gelsinger would have had time to kind of respond to what NVIDIA is doing in the front of acceleration before AMD had started to gain traction from a design win perspective with their EPYC and Ryzen processors. 3 years later, they're bringing him in late, as if it's a fourth quarter. There's a couple of minutes left, and it requires a couple of touchdowns, Hail Mary like. So he's been placed in a very difficult situation. He, from a corporate culture perspective, makes sense. He's an engineer's engineer. He's charismatic, and he's a very good cheerleader. It's just that I think the street is overestimating what he can do in the time frame. It's going to take many years.
All right, Hans Mosesmann with Rosenblatt Securities. Hans, I really appreciate you jumping on to talk through Intel's latest quarter. I know we'll be in touch.